All right, greetings, folks. Happy FOMC Day. Today's Wednesday, the 29th. Got 2 days left here. We got the stream for you, Patreon, YouTube, Discord, you know the deal. Post your comments, your questions in any platform you'd like. I'll catch them before the end of this show right here and answer all of the questions right away. But before we begin here, we're looking at the SPY, the 5 minutes chart, 688.85-ish. If you can see the picture fine, hear me fine. Give me a little bit of a feedback in the comment section. We're going to begin right away. Okay, everybody, let's begin here with how about the SPY, the 5 minutes chart. Again, another gap and maybe crapping a little bit here, but we've seen this movie before where we see a gap, crap, and then something else happens at the end of the day. It's really all about NVIDIA. NVIDIA right now is just in a parabolic blow-off top kind of rally. We're expanding valuations from yesterday to today by about $400 billion in just one day. So this is going on right now, and it's not going to stop until it faces two realities. Either the reality from the Fed, from the FOMC, of not cutting rates, or is it going to be the reality from earnings, as we see perhaps some companies showing signs of exhaustion, that they're overspending versus the revenue that they're creating, the problem that we talked about in the program last night. So for now, for this session here, I don't expect that we're going to see before the FOMC, we're going to see a major move in NVIDIA to the downside or perhaps above 212. I think that we're going to kind of consolidate here a little bit for NVIDIA. And that means the SPY could pull back just a touch, but I think that the major move, of course, will happen after the FOMC. So there's not a lot for us to do here, folks, before we head into the FOMC decision. Volatility is still going higher, by the way. So you see the VIX here, demand for volatility right now at 17, which the market is ignoring once again, saying, I don't really care. But any problem with the FOMC, and we see a pop from 17 to 20, the market is going to care this time around. So there is hedging, and they're hedging against the FOMC. They're hedging against earnings. And if any of these problems turns out to be a legitimate problem for the market, you'll see a pop in the VIX here. But right now, I expect that we're going to stay calm at around 17. We're not going to blast through before the FOMC. And that suggests, again, that we're probably not going to see a major move before the FOMC. But With that setup out of the way, we need to study the gamma just to make sure where we're going to move, up or down, what the targets are going to be after the FOMC comes out. So for that, let's do the SPY, the study here for the options market. Looking at the 29th, we have volume showing up across the board here, all the way to 694. So there's a lot of appetite here, a huge number of open interest that is showing up in the calls as folks begin to chase this rally via call options. They're not really just regular call options. They're zero DTEs, really short dated. You see some speculations here on the puts, but my 2 cents would say that if the market wants to exercise maximum pain, they're going to have to go below the highest number of calls, and that's going to be 686. Might as well just do 685 if that is the case, and eliminate all of this open interest by the end of the day. And if you go down to 685, you have a little bit of a big number here in the puts, and you can stop at 685. So I think that 85, I would not be surprised to see that as a target if the Fed comes out disappointing. Now, if the Fed comes out, I'm trying to think about what the good news would be, to be honest with you, at this point, because we priced in a lot of good news. But suppose that the market hears something that they did not hear before, and it is a positive. How high can we go? Well, in that case, you're going to see a squeeze, right? And the squeeze will take you all the way to accommodate all of this volume that is building on right here, all the way perhaps to the highest numbers of open interest that are opened last night or in the previous session. That'd be 695. So there is a possibility we squeeze to 695 if we get a piece of news. And again, I'm just being honest here. I don't think... I'm trying to think of a reason. What would the Fed say? Maybe the 50 basis points cut. Although that can be looked at as panicky by the Fed. But anyhow, the gamma suggests that we could go all the way to 695 on a squeeze higher, but maximum pain suggests that 685 would be the proper max pain for the calls to be eliminated. Now, if we look at the gamma exposure, give it a minute here so we can see it together. We look at today's expiration alone. We don't want to look all the way to the end of the week. So if we look at today's expiration alone, you see here that we're way above the gamma flip, and we have a bunch of gamma exposure all the way to 695. We have a lot of gamma exposure right here. It is dominant. So maximum pain means that you eliminate all of that call gamma exposure. Eliminate all of that open interest in the calls. And to do that, you have to go all the way down to 685 to eliminate all of that positive gamma that you see right here. And that's going to happen, of course, as the Fed gives the market maker a reason to do it. Now, if we look at the volume, because that's important for today's session, what's going on right now. If you look at the volume, they're still building in the 690, and here you see the 690 strike still building. So again, the bias remains to the upside. It's going to take an upsetting factor by the Fed for the market maker to do maximum pain to 685. Now, other names that I'm watching besides NVIDIA and the SPY, I'm watching AMD. It has retail sentiment. And if you look at AMD daily chart here, let's do the hourly so you can see it. We have somewhat of a rising wedge pattern that's going on, and I think that NVIDIA might be toppy. And if NVIDIA begins to pull back, it's probably going to drag AMD down with it. And then you have Oracle, which hasn't been behaving pretty good. You look at Oracle right here, and we're beginning to flirt with losing the 50 days moving average. If that is the case, we could see a really quick flush all the way down to the target that we talked about yesterday. So Oracle is looking on the weaker side right now. It really needs help from Microsoft's earnings, from one of these big cap earnings. And we talked about this before, that the bar is way too high for these companies. I have no idea how they're going to meet that bar and expand the revenues by these massive percentage points again. But anyhow, we're going to keep it on Oracle here. Another decision I made in the portfolio today is getting rid of Wynn Resorts. Why did we get rid of Wynn Resorts? Again, I still think that the company is probably the most solid in the Las Vegas Strip, and it's probably the most solid in Macau too. But we're seeing a topping in the shoulder right here, And to be in the safer side, we're getting all of the news about the consumer weakness and whatnot. I look at the cruises, I look at the airlines, I look at the hotels, and all of that is indicative of maybe there is a problem going on in the affluent consumer. If that is the case, then the casinos will respond too. So why not be in the safe side and just take the profits and let's wait in the sidelines. Perhaps we get a pull back here and win. We already lost the 50. Maybe we get down to the 100 or the 200, and then we can discuss it again whether we should buy it or not. But honestly, I think the consumer is just going to get weaker from this point on, and the affluent consumer will begin to also join the ranks of those who fell behind. So the definition of the affluent consumer will become more narrow as more folks begin to face economic troubles. So I think that the cyclical side of the stock market should be avoided right now. If we look at the movers really quickly here before we take your questions and your comments before the FOMC, let's do here the movers to the upside. Caterpillar, again, this is part of the AI data center mania, produced pretty good numbers. But again, is it sort of an excessive reaction here for a classic company like Caterpillar? Perhaps. I mean, the stock trading at about $600. The way I look at this is an opportunity to sell some call exposure. So Caterpillar, $5.95 right now. So trading higher. Yeah, this report was pretty good. I had the chance of looking at it, but if you look at the 600 calls for this week, volume is still weak, but you can collect about 750. I'm guessing here 750, 760. That's a huge amount of money. And if Caterpillar begins to top right here, and we have a disappointment by the FOMC, then that's going to be right in your bank, 600 and 750. So I'm leaning toward opening something like this. I could do also a reverse calendar, such as buying the 600. Let's say we sell the 600 for November 21st, and then we buy the 600 for this week. That's another idea to receive credit. But there are a lot of creative ways to exploit this pop right here for credit. Since the name is trading at above $595, you can raise a lot of credit. So that's the idea behind Caterpillar. We can brainstorm more ideas, but that's what I'm going to do before the end of this session, is to raise some credit by selling call options on Caterpillar. We see a lot of the data center names again, Caterpillar. And yesterday, Jensen Huang says there was no bubble, but he's dumping hundreds of millions of dollars worth of shares. Well, if it's not a bubble and we're building the new phase of the future, should put your money where your mouth is and not dump shares on NVIDIA. But because of Jensen Huang's comments, we see CEG, even Constellation Energy, beginning to recover a little bit here, although not making a new high. So that could be problematic if Microsoft comes out disappointing. With NVIDIA, we talked about OKLO beginning to find a footing, but if OKLO begin to head down and close this gap right here, I would say that it is a failure of the topping in the shoulder. At that point, we have to short the name, actual short. Micron remains the bullet stock, keeps going, but the divergence from the 50 days is just insane. So any disappointment coming from the big guys like Google, Meta, Amazon could influence a name like Micron to head down and correct too. What do we see here? We have Palantir again. This is we're no longer having Fibonacci here. We have to make a higher high. So the top is not in until perhaps November 3rd when we get earnings from Palantir. Is the bar too high? I think that's going to be the case with a lot of these names. Rigetti rebounding a little bit, but to be honest with you, if I see another flip back to the red, I'm adding to my shorts in Rigetti here because that's going to be a confirmation that we ran out of buyers. There's no appetite to buy it, and we'll see more shorting and more selling. So I want to add to my short in Rigetti, but just give it a little bit here to flip back in the red again as a confirmation. The dollar, let's check on the dollar. My 2 cents is it's probably going to head down, but you see copper, FCX still heading higher, so that's the solid name you want to be in. Dips and ALB, always buyable, so long as the dollar is heading down. Carrier, along with Caterpillar, beginning to find some footing, so can we argue hit inverse on the shoulder? I was really close in buying the stock yesterday, But that report was not, it wasn't good. They were losing revenue year on year, losing um, contraction in revenue, contraction in profits. So that didn't make sense to me. I want to see it close above the 50 days moving average, and then maybe I'll chase it all the way to the 200. Halliburton remains the hottest name in energy because of its AI involvement. So that could be another AI mania stock within energy that keeps going higher. And it is the outperformer, to be honest with you. Would I chase it right now? Not me, but hey, if you do, I'm not holding that against you. If you're looking for anything about data centers, any name, any stock that is cheap, I mean, Halliburton is the only one available right now. All of the data center plays are too expensive. A lot of the chip names, again, based on that Jensen Huang, AVGO, Marvell, Supermicro, CoreWeave, all of these guys moving higher. GDX, though, GDX above the 50 again. But it's going to depend on how the FOMC is going to move the market. So we have to wait and see. We can't really jump the gun and make a decision about GDX or GLD right now. We can't even make a decision about uranium, by the way, as much as I want to buy it. But we have to have a confirmation that the dollar is heading down before we do that. Same thing with the Chinese names. You can't really chase them right now until we have certainty that the dollar is heading down. Okay, movers to the downside. Caesars, a lot of the casinos not doing pretty good. And Caesars, as I said before, are probably going to go bankrupt in the next crisis. But you see Etsy, name that we own, is down here. Not because the report is bad, by the way. The name is down because the CEO might exit, suggested that he's going to exit. So this is a sell-off that is not really based on a fundamental reason. And I think that it might be, at the end of the day, an opportunity to buy in Etsy because the results were not bad. It was just the departure of the CEO. Adobe, concerning. A lot of folks want to buy the dip in Adobe, but I think you got to wait here. This name is disrupted by AI. Casinos are really doing badly. This is a name that we're short. The Maverick portfolio, Golden Entertainment, it just continues to collapse. I don't see good things happening here. Lululemon, we need to go up back above the 50 again. We'll see. I mean, I have tolerance all the way to 170, but after 170, I think that we probably made a mistake here. We got to reassess. But for now, we'll give it a chance to trade above the 50 again. Wingstop caught my eyes because Wingstop right now is flirting with losing a bottom right here. And if it does, there's a flush coming. So Wingstop doesn't look pretty good here to me. And to be honest with you, across 50, below the 200, and you put two and two together, these wings are not really cheap. It costs more than the average meal, really. So we have consumer weakness. It makes sense that Wingstop will suffer. We see Hershey's down because of earnings. Again, I didn't think that the report was bad, to be honest with you. So we'll do an analysis of this report and suggest whether we should be buying more, adding to that position, or abandoning it. Right now, I'm leaning toward adding more in Hershey's, but let's do that analysis and then make a decision. PayPal, always a heartbreaker. Every time you think it's going to move to the upside and break out of this consolidation range, it just fails right away. And yesterday was no exception. You see a big pop in PayPal and then boom, just all of it back where it was. And even though we got good news about the ChatGPT, so when you have an earnings report and have a positive piece of news of ChatGPT, yet the stock goes down to negative again, that's an ominous sign that this is not a good investment here and probably has more downside to come. I find the action in Expedia, I find the action in Royal Caribbean, and a lot of the transportation names and the travel names as really concerning. Vici Properties is signaling something that something really bad is happening right now. I mean, you see a collapse like this in, I would say, one of the strongest names really in real estate. But their properties in Vegas, they're losing value. They're not seeing customers anymore. They have a lot of properties that are losing value as we speak in other places. So this is a mini warning sign here that a lot of folks are not paying attention to. So let's see what the report is going to say in tomorrow's session. Boeing going down, another disappointment for cash burn, I guess. But besides that, we don't have massive movements here to the downside. So let's go back to comments and your questions. I'm going to keep it here on Oracle because this is the name that I'm watching. It might get weaker. It might break the support right here. And if it does, it's going to be a problem for this name. Anyhow, let's take your comments and questions. Folks, thank you for being patient here with me. But good morning, everybody. And let's do, hey, Mav, what has to report Palantir to provide the valuation of the current price? What is the option market predicting for Carvana and Palantir as earnings soon? Let's check out. Look, my 2 cents in Palantir, if they continue to show growth from government contracts, even though the valuation is absurd, they're going to continue to go higher, especially with a low interest rate environment. If the Fed is cutting rates, they're only going to head down if it becomes clear that the revenue growth has peaked and it's beginning to head down. And they're using a lot of expenses, which they're not right now. So the valuation is absurd in Palantir, and at some point it's going to trim back. I think the fair valuation will be in around 40 to 60 for the growth of the company. But from what point are we going to break 200, 220, 250? That's up for grabs, really, until you see a factor that stops the story here, that either internally from the company, that the company is showing revenue growth slowing down, or an external factor of the Federal Reserve, for example, not cutting rates, then that doesn't excuse a lot of these overvaluations. When you have a tightening policy, when you have a restrictive policy, the valuations by default have to go down. So to answer the other part of your question, which is what does the options market say about Palantir's earnings? I mean, that's going to come out November 3rd, so next week. And if we do Palantir, and just look at what they're betting on, that's all we need to do here. And if we do the expiration date of the 7th, which I think would include the 3rd, yep, you will see here they're closing some of these bets, but we have still a really high open interest in the 210. That's 11,000 contracts that are open. You see the puts here, non-existent, right? You see the puts not even trying. A lot of open interest in the calls, a lot of possibilities for gamma squeezes, but you're not seeing any counter from the puts. And we see that in a lot of names, by the way. We see that a lot of bears, for understandable reasons, have given up betting against these names. They have few wild bets here that require massive downside, like 30% of the downside to make money. But the majority of the bets, we see it happening in the upside. So the options market is not suggesting that we have any insider information or any positioning beforehand that Palantir would go down. If anything, they're expecting that it's going to go higher. Now, when we look at Carvana, what can we see here with Carvana? Not really an active position in the options market. The thing with Carvana is it's really the shorts have been in and now they didn't cover, and all of a sudden they have to scramble to cover. That's the problem. So Carvana, I would say you still have to wait till this report comes out. And even if it goes down, let's say the Carvana after reporting comes down, which it should, by the way, could come down, let's say 10%. That's okay. You missed out on the 10%. But you know now that the top is already in. And you begin shorting it. From that point out, maybe it will go down by 50, 60%. And you make big bucks shorting the name. So you don't need to be the first shorting it. You need to have confirmation before you do so. Because this is a dangerous name. You can lose a lot of money if you short it and it keeps going up. At 362-ish, it's a big commitment. Okay, SPY, October 31st, 666 puts. How do we play this? Okay, I'm in it till the end, my friend. I'm not going to cut it right now. I mean, let's cut it right now, right? Let's take it off right now. The next thing you know, the Fed flushes down. No, it's a bet on the landmines that one of them could detonate this week, be it China, be it the Fed, be it earnings, and it could take us closer, if not below 666. So I'm keeping it all the way to the end here. And yesterday we averaged 2 to 1. So the cost already is under $1. Hey, Mav, what has to report? We talked about this. I'm in the VIX play, 17 calls for the 5th now. How should I plan on getting out if we do end up popping with your expertise? Okay, so if you pop in the VIX, you have the 17 calls, right? If you get a pop after the FOMC, you don't want to hold on the VIX call for too much, but you want to roll it up quickly. So if you go 17 to 20 in today's session, for example, you want to close that trade and roll it all the way to the 25 with a portion of your profits, not all of it. That way you still have skin in the game if there's more appreciation and volatility. But you've already made your juice right here. You don't need to hold in the 17 all the way for the VIX, for example, to go to 23, then it tops, it comes back down. Because on the way down right here, you lose money. Even though you're still above 17, your contract is technically in the money. But the reduction in implied volatility would do that. So you have to be really quick here in going to 20. Okay, done. Let's book it and just roll it to 25. There's more to come. We still have skin in the game. Happy Wednesday, and Mav holding WAL 60 puts for November 21st. You're down 79%. What do you add? This is a bet against regional banks, so the 60 puts, it's a little bit too far out of the money, 60. Maybe you've initiated right here, but again, you're going way out of the money for a monthly expiration, which, I mean, at the end of the day, WAL could go down, but you're too far, right? So you have a support right here. We're broken support. I think we're retesting one of these averages. Yep, the 200. We have a failure. At the end of the day, it could be inverse ABC, but you need time. And 60 would not be appropriate for November. It's going to be appropriate for December. Now, I'm not saying that you cannot recoup or recover some of the value. You could if there's more downside to come in the next few days. But I would say use that opportunity to exit and do something better. Do something such as the 70 and then sell the 60. You got to utilize spreads, folks. I know some of you don't want to do that because of your broker or whatever, but at the end of the day, you got to understand that when you buy naked puts, when you buy naked calls, the market makers already priced in all of the odds, and they priced in the price to make you lose, to make sure that the house wins. So whatever call, whatever put you buy, you're at disadvantage because the chance of profitability is low. That's what the market maker's job is. To cheat the market maker, to beat the market maker, you need to reduce your entry cost and increase the odds of profitability. And you can do that by, in your trades, engaging in becoming the market maker yourself. And you can do that by opening spreads, by buying a call, selling another call, buying a put, selling another put, or vice versa. You can buy a put and sell a call, or buy a call and sell a put. So in this case, I would say that you could go to 70. Mind you, this name doesn't have a lot of volume, so it could be problematic. Yep. So here, if you buy the 70 puts and then sell the 60 puts, again, the volume is still way too low. Maybe that's going to improve at the end of the day, but that's another problem that we need to pay attention to. Do not use options market betting on names that don't show up in volume, because you're not going to be able to get out. You're not going to be able to sell your contract to somebody else, even if you're profitable. So before we enter any put option or call option, we need to have volume. We need to make sure that this name is tradable in the options market. If not, then the only way to do it, if you want to short the name, is to just engage in a short. So there are a lot of problems with this trade right here. From the fact that the name doesn't have volume, from the fact that we're way out of the money. So I would say, again, best thing you can do right now is you're probably going to see more downside to come absent of a break above the 200. If you have a close above the 200, forget about it. But with this look right here, I think we have a little bit more downside to come, and use that downside to reduce your loss and exit the trade, because it's not structured pretty good. And maybe you want to do something, for example, against the KRE, which KRE is reflective of WAL and many other names, but it has volume in the options market. Maybe you'll be better. And again, it's similarly priced, really, to WAL. So I think it's your interest to switch to KRE from WAL. I cannot short calls without a long call hedge. That is... what do you recommend in place of reverse calendar? So if you can't do reverse calendar, let's say we're going, I'm assuming you're talking about Caterpillar, right? You want to You can't sell a naked call. So the only option you got is either a call spread. So we call it a bear call spread. And you go, for example, here is sell the 600, then buy the 610 or the 605 and receive some credit. Not going to be as big as a credit if you sold naked or reverse calendar, but another way you can do it with a name with such volatility right now, you could try on an iron condor. In an iron condor, you're betting on the stock is probably topped, but it's not going to go down much. And you raise a little bit more credit here. So if you use the 600, 610, and then 580, 570, you raise about 500 for, we got what, 2 days remaining of the week? So that's one way to increase your credit and have exposure on both sides. So it's either iron condor or it's going to be a bear calendar or bear credit spread. And look at the chance of profitability here, right? You want to make sure that the chance of profitability is high enough. So with a credit spread alone, it's 67. If you engage in iron butterfly or iron condor, it goes down to the 40s. Now, if you do a reverse calendar, such as let's buy 31st and then sell 14th, for example, chance of profit goes down. So it's a risk versus reward thing. Your credit is going to increase, but reduce your chance of profitability. So you have to make that decision yourself and decide which one works for you in terms of risk versus reward. What is your suggestion for the cheapest lotto we can get in? So we talked about this in the morning brief. You have a lot of choices. If you think the dollar is going to go down or go up, then you have J-Dust, or this is the gold miners ETF. In the case of the dollar heading down, right, that means that gold miners will go higher. And if that is the case, you want to short this guy, you want to buy some puts on it. If you see the opposite, you see, for example, the dollar heading higher and gold cracking down more, then the gold miners will head down more, and you'll see a pop in J-Dust. Another one would be TZA. The IWM is really sensitive to interest rates, and if we have rates coming back up, even after a cut, you're probably going to see the TZA hitting higher. TLT is another one, but the TLT is because of the expirations. You can pick today or tomorrow's expiration. But again, another one would be the SQs. Just make sure these inverse indicators, you're not spending a lot of money in them. They're all cheaply priced, and that's why we want to use them here. If we look at SQs, I'm seeing somewhat, it could be a falling knife, but again, could also be stretching the rubber band to the downside, and you see a break from a falling wedge. Am I going to take the shot? Of course, you bet I'm going to take the shot. Am I 100% confident that it's going to play out? We're going to make money out of it? No. But you got to take the shot. When you see a setup like this, you're heading into an FOMC with an extended market, you got to take the shot. So we'll do something here in the SQs, and we're going to keep it at the 31st. We're not going to go way out of the money because you got to look at your break even and consider that. So if you go 13, that'll be ideal. 13 and a half is a little bit too far for my taste. So I'm going to do 13 calls. We'll pay about 26 cents for them, and we have a pretty good chance of profit at 30%. And we need a break even of about 4, which means that Q's going down by about 1% or so, 1.25. That's going to do the job. Is 1.25 downside for the Q's reasonable? Yes. 3 or 4% reasonable for the SQs? Yes, because it will take us up all the way to about 13.30. So I'm going to do this one. Probably going to do something on J-Dust, TZA. You pick your pick here, but you got to utilize these inverse indicators. Don't forget about the SPXS. That's about chips. If you think that NVIDIA is done, okay, the split has happened. And you see here that this one might not be as cheap as it used to because they did the reverse split. Let's check out. It used to be popular when it was cheap, so SPXS. Yeah, see, now you're not getting volume already. If you go to the 50, the 35, you're paying 50, that's a little bit too much. So let's stick with the SQs. I think that's the offers the best deal in town. Okay, let's go back to SPY, see what's going on here. SPY still consolidating, not doing anything at all. Why aren't the indices not responding appropriately with the VIX? We talked about the complacency, right? I mean, you've seen the data that I showed you yesterday. The pop that we've seen in the VIX in October 10 should have reduced the S&P 500 by 3 to 5%, but it didn't because the market is in this extreme complacency that it doesn't matter. So long as you got NVIDIA going higher, it doesn't matter. You can hedge against whatever you want, so long as NVIDIA and some of the big caps and some of the chips going higher, they're being really cocky right now. Could it backfire? Absolutely. Now, we could see another pop in the VIX, in my opinion, all the way to 20 and above. At this point, the market's not going to be able to ignore it. You might see a big flush right away, and you get to that 666 in one shot, just because of the implied volatility. But you need a catalyst to get that volatility to move up. UVXY, 12 calls. I'm not a fan of the UVXY. Every time I traded UVXY, I lost money, at least recently. It used to be popular back in the day, like in the 20 teens. But right now it's a flawed indicator. Look at the pop that we see in the VIX, the pop that we see in the VXX. Nothing showing up here in the UVXY. So it's just a flawed ETF. If you want to lose money, go ahead. But you're better off even using VXX or SPY puts or even SPXS, which is the bear indicator. You can just buy calls on this guy right here. You can, if it's a little bit expensive because the split, you can go with the SPXU. That's going to give you short S&P. You buy calls on it, and it's priced at about $12 a share, so it's going to be cheaper to have these calls. I suggest doing that. It's better strategy than buying UVXY calls. Unless you can access the VIX futures and bet on VIX futures calls, I do not recommend the VIX proxies. Hey, Mav, what do you mean 2 to 1 regarding the SPY puts? So let's say you bought one contract on Friday. I'm averaging 2 to 1, so I'm buying two contracts against the one that I have to reduce the or average down in the price. That's what it means. So if you bought, 5 contracts on Friday, I'm buying 10, 2 to 1. George, you say rug pull this week. It kind of feels like it. There's something wrong and ominous with what we're seeing right here. It feels like we're ignoring a lot of things that we should not ignore. And volatility, the way it's acting right now, it's not assuring. It's not saying, hey, we're out of the woods, folks. And we should be acting irrationally like this. So, yeah, there's a lot of ingredients here that could make a rug pull. GLD 390, 400 calls small for the Jan 26. Border the low, so GLD 390, 400. See, I would wait before I do that. Maybe have higher confidence, but I would wait before doing that. If I think that gold is going to go higher because the dollar is going to head down, whatever the Fed does, let's clean this up here. This is from yesterday. There we go. Suppose that the dollar heads down, and that ignites a rally in GLD. The safest way to bet would be in JDST. And in this case, we're going to be buying puts in this guy. So let's price in some puts for this week. Let's see if we can get volume to begin with, because sometimes you can't get volume here. Yep, no volume today. So let's go with DUST. See if we have volume in the puts. Still low volume, but one of these two, utilize one of these two as your bet, or if you can't find volume at all, it's the GDX. So we start with GDX calls really cheap. Expiration date's going to be really soon because we're just testing the waters here. We're not making a major bet yet. And we'll go, for example, to 74. 75 is reasonable too, but 74 is the sweet spot. So we'll go with this contract right here. If the dollar indeed heads down and gold begins to find a footing, then we'll switch to GLD or buy the futures or commit more capital in positioning for the GLD. Mav, I have the SPY 687 puts for this week and 672 for November 21st. You have the IWM 248 puts for November 21st. So let's, the 687 is close enough for this week. Now let's do the other ones. 72, by the way, for November is still a reasonable shot, but the IWM, let's do this one here. IWM 248. You're not too far. You're not going too far out of the money. So I would say, again, your guideline would be if you close above the previous high, 252.77, then you know that your timing is not pretty good and you have to exit. But if you stay in this range and we begin to head down, the trade will be in the money really fast. You are in next week. 666 puts. No, it's this week. I got them for this week. The 666 puts for this week. It's a wild shot. It's going to require, more than a 3% drop for me to make money. But I think that we could have a rug pull here, and that's my bet on it. Big earnings in TER and big gains in options and stocks. Sold all 5 minutes after the open and will re-enter after cooling. Best robotic stocks. So TER. Yeah, got a little bit toppy here, right? A little bit toppy. If you look at the Bollinger Bands, we're probably gapping above. Yeah, once you gap above, safer thing you can do is to sell covered calls or to book profits, then re-enter. Maybe after it begins to catch up with the bands. The bands will expand, the candles will go down, and then you have permission. If you still like the name, of course, to continue to bet on it. But I think that if you made good profits here, you're done with this one. Now you're looking for the next opportunity. Little bit of weakness. We see the VIX here. Let's check on the VIX. Gave up on 17, but there could be another attempt here to crack above 17. NVIDIA is cooling off a little bit, but I don't expect a lot. AMD is cooling off more. Would need to happen for the SMH to flush down and say I'm done. Thank you very much. What needs to happen is you have to dent the story, because Jensen Huang came out yesterday and sold a story. He said that we still got demand, $500 billion, and people are spending. It doesn't matter what they spend on, the price sensitivity is not existing, and so we don't have a bubble because they keep buying. And he sold this story that the narrative is intact. Now, what you need to do is either, again, an external factor, which is coming from the interest rates, that the Fed is not going to cut rates, then that takes a lot of the risk taking out of the stock market. The internal factor would be if you get earnings from Microsoft or Amazon or Meta, some of these big companies, and they begin to show contraction margin growth. The peak is behind us. Margin growth is going down because they're spending more and not generating enough revenue to justify it. What does that mean? It means that down the line, the company would have to cut down spending, and that's going to impact NVIDIA negatively. If that is the case, and the market will sniff all of that ahead of time, by the way. As soon as you get the report, the market will sniff that and make the move right away. You'll see NVIDIA giving up and the SMH giving up because NVIDIA is the highest weight in the SMH right now. Got to understand that when it comes to the bearish investing opportunity against the bubble, this is the final boss. Right, NVIDIA's Cisco 99. This is going to be the final boss. It's going to go last. It's not going to be going down first. You will see smaller names blowing up first. You'll see CoreWeave, for example, going bust or facing troubles, or you see smaller companies facing troubles. But then, at the end of the day, it catches up to NVIDIA that even with the price advantage that they have, they cannot really maintain the growth rate. And it was just a transitory period where we've seen expansion in the growth rate, and now we have to contract that valuation to go back to reality, what the company can produce in terms of growth and revenue and profits without the bubble, without the overspending. And by the way, it looks like a topping candle right here. That one is also above the Bollinger Bands, so could be. I would say that the best thing we can do here is perhaps, I'm going to take a shot on it and buy the 200 puts for this week as a wild card. So I'm going to do NVIDIA, and I'm going to do the 200 here. Let's see if we go to next week. It's a little bit expensive. Yep. What if I do next week and I go with the 200 and sell the 195? That's going to cost me 129. Okay, so if I do this naked, 157. So it makes sense to go with 200, 195 for the 7th because it's going to spend less and have a bigger chance of profitability. I can go even to the 14. I'm spending 150 here to make 350. That's a pretty good risk versus reward. I mean, believe it or not, NVIDIA options is still cheap. From an implied volatility perspective, they're still cheap. So I'm going to make that bet before the close today. Why is the Russell 2000 popping? Let's see here. You might have seen the information, by the way, today. Somebody shared on Twitter that the biggest weight in the IWM is becoming these meme stocks. The Rigettis of the world, the OKLOs. So those are the ones that are moving it higher. But again, IWM is going to be really, really sensitive to this guy, the 2-year yield. If we see the 2-year yield moving higher, meaning that we priced in the interest rate cuts, and even if we get the interest rate cut, we see buy the rumor, sell the news in the bond market, we see yields going up. That's going to pull back the IWM. So you need to wait for that to happen to get your confirmation. Hey Mav, Claude, what do you think about investment in CPNG for a couple of months? CPNG is a name that I've been watching, but I never really made the initiative to invest in it. So if you look at Coupang, it looks like the bull flag pattern here is about to break out, and we have higher highs. We do have a report coming though, so in this circumstance, what I would do is buy some call options if I can find volume, and wait for this report to come out. If the report gives me confirmation, and now we're trading at 34 or 35, then exercise and own the shares or whatever call strike that you bought. But buying the shares right now, what if this report is disappointing and we see a flush and we close the gap right here? You don't want to assume too much risk. And the way to compromise here is to use call options. IWM had strong gamma at 250 this morning. Yeah, it did, but it's based on a lot of the meme stocks that are moving higher today. If we look at the map, just look at a regular map here. If we do the Russell 2000, zoom out a little bit so we can see it better, you will see that the majority of names are down, but you have Bloom Energy, 22%, KTOS, all of these heavier weighted names that you see right here, Rigetti, the quantum crap. Those are the ones that are moving, and some of the nuclear energies, of course, but it's really Bloom Energy, K2TOS, which I think it used to be a high-quality name, but right now it became a speculative mania, and these quantum computing names right here. So if these cool off, the Russell 2000, the breadth is negative, all in all. So the Russell 2000 is now, ironically, facing the same problem of the S&P 500, that you have these AI engagement, AI mania names, like OKLO, Bloom Energy, the quantum stuff that could be considered as part of the AI mania, leading and tilting the index higher. So any damage in the AI narrative will not just take the NASDAQ or the Dow or the S&P, it will take the Russell 2000 down too. This is the scary part about all of this, that we're all in. As an economy, as a market, we're all in with this AI mania. I mean, even the Dow Jones, that used to be a reflection of value. Look at this. The majority of names in the Dow Jones are down today. But you have NVIDIA up 3.5%. And what do you see? The Dow Jones is trading positive. Does that make sense to anybody? Of course not. But we have one name that is literally moving the index higher, while the rest of the index is down. And this is the same phenomenon that we see in the Russell 2000. Okay, let's go back to the SPY and give you an update on what we see in the gamma. So we go here, SPY, see if they're buying puts, calls. What are they doing now? The expiration date of the 29th. Still buying calls Yeah, the volume is still big here. I see the volume as, in combination with the open interest, I could see 695 as a squeeze today, but my 2 cents is the Fed is going to disappoint. If the Fed disappoints, then you have enough volume and open interest to do maximum pain all the way to 85. So that's going to be the dynamic. But between now and then, I don't think we're going to find any movement or any trade that is worthy. I might take the NVIDIA trade that I just talked about, since we have a technical top right here. AMD, we have earnings coming out tomorrow, so we're probably not going to be able to get, or not tomorrow, but next week. So we're not going to have an opportunity to do some options here, so I'm going to leave it alone. I might do the SQs, and I will do the SQs before the FOMC. So NVIDIA and the SQs calls will happen before the FOMC. And I might add something else. I might add something with gold. If I can find volume in these inverse gold miners indicators, I might add some puts on them. But besides that, folks, I'm not going to do anything before we get the FOMC. Lulu looks like a cut soon. Yeah, if we close below 170, I think that we might have gotten the wrong timing here, because we got good news for the company, right? We got good collaboration here. We got a pop above the 50. There's no reason to give it up, unless the selling pressure is still way too high. So we'll give it a little bit of time. We go below 170. Nope, I can't hold it anymore. If we flip back above the 50 days moving average, then okay, we're back on track, and let's just keep it as it is. SDX, crazy, up 18%. Stop this market, I want to exit. SDX. And the problem is you can't even participate in such moves like this, right? Because the implied volatility is way too high. You can buy, let's look at SDX here. Seagate Technology, which is going back to the same high it cracked down from just a few sessions ago. Look at SDX. I mean, when you talk about a name up 18, 19%, let's say that you did the November. You're a reasonable trader. You did the November calls. This is what you're making. That's if you find volume. Right? You're making 200, 300%, which, I mean, for a pop of 18%, I expect to be making 1,000%, 2,000% worth of gains. So the pricing is just not attractive, and there's little opportunity to participate in all of these pops. Most of them happening via algorithms, most of them happening via the market maker. But right now, let's see how Microsoft, Amazon, Google, and Meta will come out, because those are the most important names. Those are the big spenders that are keeping all of these names like SDX and Micron and NVIDIA and AMD going. And if they begin to show weakness, it's just going to spread across the market altogether. So let's be patient here. There's going to be a time and place to short all of this stuff. But you have to be really, really patient, because you make a mistake of entering right now, and it turns out to be the wrong time, you're going to pay dearly for it. If you go to Micron, for example, I mean, Micron was much, much smaller company back then, but it also participated in the dot-com bubble, and folks could have said that this is right here really toppy, the stock is expensive. It just kept going until it cracked once and for all. So you have to be really, really patient. You're probably not going to enter the put or the short, whichever one you use, until you see a little bit of more downside. So somebody who successfully shorted Micron in the 1990s, the dot-com bubble, might have shorted right here and missed out on all of this. But at least they missed out on the pain of, let's say, shorting here and then seeing the stock going higher. And then you enjoy the drop all the way to the bottom. So we have to be really, really careful with these names. And you also need to watch the 50. For a stock like Micron, for example, that is established, you have to look at the indicator that I gave you, right? Switch it here and look at the weekly. We don't look at the daily, we look at the weekly. That's going to be a confirmation. So, for example, here you got a confirmation. The stock went down. Then you got a bullish confirmation right here. Stock went higher. Yeah, we can see leading indicators of the daily flipping back to negative. You see a cross like this. That's going to be a leading indicator, but not a confirmation. Then you see it in the weekly. And then at that point, yeah, you'll miss about 5-10% worth of downside, but then you have a bearish phase coming that could produce 20% more to the downside. That's the idea, so stay patient here. No need to jump the gun. Okay, the SPY still holding. I'm not seeing, let's look at the VIX here. Pulled back from 17. Let's look at the hourly. It'll probably try to give it a shot again after the FOMC. The behavior, for me at least, suggests that there is hedging, a little bit of resistance to 17, but unless they engulf the candle right here that we got in the morning, I think the next move will be above 17. We're going to crack above 17. Okay, folks, let's wrap up this conversation right here because we have an important day coming. FOMC will be back. I believe when Powell begins talking, we'll be back in the chat session because we have the closing hour in Discord. So join us. Going to be back in Discord in the closing hour. Anything that happens, we'll give you updates right away. But thank you for participating in this conversation right here. Hope you got something out of it, and we'll meet again soon. Good luck.